Hello everyone, welcome to your weekly Onchain review. This is your host Sky and today is 12th of August 2022. Let's dive in and look at some important data. Today we have the BTC chart where we saw that when the BTC price broke out from electricity production cost resistance, which was a significant resistance for quite a while, we got a move to our first TP area. This TP area is also the realized price of average realized price of all the Bitcoin addresses. We are unable to close above it until now, but this is the place to take profit, and flip of this will give us move to the next TP area. This is the total 2 chart, and here we see that the total 2 is approaching this downtrend resistance, downtrend line, and it has 5% more to go, and a reaction is possible here, and it may go down and attempt again. So this is the resistance, and it also coincides with the resistance on BTC chart, which is the average realized price. We have also seen this RSI on total 2, and this is also approaching resistance right now. Significant moves to the downside whenever RSI has approached this level on total 2. This is the average realized price of different holders in the market. So you see 10 years have the realized price at $1. We got a bounce from the realized price of holders of 18 months to 2 years. The average of all of these cohorts is at 23,500 and 24k, which is posing resistance right now, and that is why it is mentioned as a TP area on our BTC chart. We are not doing technical analysis of Bitcoin. For that, please see Sears and Tay's analysis. We are just mentioning in this that our on-chain resistance of electricity production cost, which was a significant resistance, when it broke, we wanted the price at least to go to the average realized price where it is right now, and that is our second area of resistance. So this is the realized price of addresses holding 10 to 100 Bitcoins, and it has acted as support, a key support in 3 bear markets, and it is at 12,780 right now. I'm just showing you this, that if our support level breaks, then this will be activated. But for now, we are looking for the moves to the upside till the support is holding. Next we have is the short-term holders SOPR. Now we know that SOPR, when it is at the level of 1, then it means that the short-term holders are at a break-even point. In bull markets, this acts as support, and in bear market, it acts as resistance. So we are at resistance right now in short-term holders. It is currently at 1.01. So we are at resistance right now. What we want to see is to flip this resistance and evolve above 1. So you can see here how we approach the resistance, and we started to evolve above 1, and it gave rise to a rally. Similarly here also, when we flipped 1 and started evolving above it, there was a rally in the Bitcoin price. So that is what we are expecting right now, but until and unless it is flipped, till then it acts as resistance. So you see here it has acted as a resistance here, then here also, and if you see here in the bear market. So in bear market, 1 acts as resistance for short-term holders. This is the adjusted SOPR, and the logic remains the same. 1 acts as resistance, and the dark line here is the 30-day moving average of the SOPR, and this light line is the present day adjusted SOPR, and presently we are above 1 or at 1, so we are at resistance here also, and we need to flip this. And same logic applies whenever it evolves above 1, we see a rally. So we bought here when SOPR was at critical zone, extreme buy zone, which was 0.93, and in our previous reports we told people to buy here, by looking at this metric and few other metrics, and now we have approached 1 and we got a rally from 18k, 17, 18k to 24k on Bitcoin. Next we have is the long-term holders SOPR. So you can see how long-term holders SOPR is in the area of value for long-term accumulation, and it is still there. Presently, yesterday it actually broke above 1 and it went till 1.59, and now it again, after the dump yesterday, it went back to below 1, and right now currently it is sitting at 0.59. So long-term holders are experiencing loss below this. So long-term holders are experiencing loss below whenever it is below 1. So now you can see that this rally is kind of a short squeeze, and it is not the resumption of the new bull market. This we can see because right now long-term holders are in loss, and few other metrics also. It still has to prove that if the new bull cycle has started or not, but right now what we can see is that it is a short squeeze, and that will be clear by watching other metrics also. For now, what I want to show you is that long-term holder SOPR, whenever it has gone below 1 or this level specifically, then it has stayed in this level for quite some time. For example, in 2017, the ratio stayed below this level for about 314 days. During the corona drop, it stayed here for 54 days, and it will right now it has been 76 days since the long-term holders have been experiencing losses. 76 days. So if you see past cycles, this is 2012, this is 2013-14, and this is 15. So here we saw that when this bull market ended of 2014, and long-term holder SOPR went below this level, it stayed in this level for 390 days, and in 2012 it stayed in this level for 184 days. So now also we have ended a significant big bull market, and it is probable that it will take a year or so for the next bull run to begin, if we consider the data according to this metric. However, we can still if we are looking at short term or mid term, we can look at adjusted SOPR and short term holder SOPR and see if there is a short squeeze and a bear market rallies which are taking place. Next we have is the market value to realized value, which is also called MVRV, and we have already understood that lower the MVRV goes, more attractive BTC price becomes to buy. Now currently we saw the MVRV go as low as the level it reached in 2018 bull market, and also where it touched at the corona drop level, and here we told members to buy, and now we see that it has risen till 1.10 from 0.85. The significant area of resistance on MVRV will be around this level, 1.55 and even 1.35. So these are the areas of resistance. Next we have is the PUELL multiple, and PUELL multiple, its historical bottom is at 0.5. Historical low in past 10 years has been 0.33. Right now we saw a bounce from this area. This was our area of high value, and this has risen from there and is trending upwards. It is a good sign, and the next area of resistance is at 1. This is the NUPL, net unrealized profit and loss chart. Now we see this is the capitulation zone, and we got into the capitulation zone. Now we are trending upwards. We got a bounce from corona drop level. We didn't go as low as the level which we saw in 2018 bear market, which signifies that in this crash, in this bear market, we didn't have losses as similar, as grave as they were in 2018 bear market. Right now the resistance it faces will come at 0.24. We are currently sitting at 0.09. This is a funding chart. Funding is positive right now. It is at 0.01. This blue line is the neutral state, and even the 30-day moving average of funding is above zero. It's positive. So if what we have seen throughout this downtrend is that whenever the funding has gotten positive, we have seen a dump. Whenever it has gone positive, we have seen a dump. Okay, and now if this rally and short squeeze it has to sustain, we need to see that positive funding is sustained with upward movement in price. That will be a sign of strength for this rally. Otherwise, the best time to buy is when the funding is negative for quite some time. Second best time is when it is positive and moving in direct proportion with price, direct relation with price. So this is the open interest, and open interest has been rising. This is the bottom with the price. So, and it is approaching resistance right now, if you can see. This is the present day open interest in the lighter purple, and this is 30-day moving average of the same. So currently the present day metric is approaching resistance. This is the leverage, and we saw that leverage went to its all-time high, which is at 0.33, and after that, this was on 7th July 22, and after that we have seen a gradual decline in leverage while the price is going up. But overall, if we see from the bottom till now, there has been a direct relationship with price, and the leverage has increased as the price has increased, and people are going long, and they started going long. This time at 7th July, this was the time when high derivative trades were opened up, and this rally seems to be fueled by the futures market, the derivative market, which is not that healthy. It is also seen that this market is fueled by the rally in Ethereum, and generally Ethereum rallies are not that strong. It's a narrative based rally. Next we have is the fear and greed index. Fear and greed index has also, as the price has gone up, expectedly the fear greed index is also turning from extreme fear to fear now. So last month it was extreme fear, and it reached the level at 10. Today it is at 32. So you can see in this chart, this is the zone of extreme fear, this block, and we have seen that confidence has returned as stability has been provided by the zone of 17 to 20k. Below 20k there was extreme fear, and that was a good time to buy, and now we are returning back to fear. So this is a chart which was shared on CryptoQuant, and it is the spent output value bands of all exchanges. The analysis of it shows that this rally was fueled by a cascade of short liquidations. In fact, the liquidation volume was the highest since late July, which was 886 Bitcoin in an hour. It was not the new and low volume addresses, but the older and larger amount of Bitcoin holders who moved the market. Exchange inflows spent output value bands shows the value of Bitcoin addresses inflows to exchanges. Demonstrate a bigger amount of Bitcoin addresses moved to exchanges after the inflation data was announced. Inflow spent output age band percentage, which shows the age of coins moving into exchanges, indicate 1000 to 10,000 BTC holders moved their coins to exchanges more than usual on Wednesday. So now this is also interesting that the addresses, this chart shows the active addresses and whether they are increasing or not. If they are increasing, it is a sign of strength for the market. So the increase in transactions and active addresses can indicate the market support for the price increase. In the past week, although we had a relative price increase, the number of transactions and the number of active addresses have decreased. So now this also indicates that it is a futures led rally and not a spot driven rally, and also the rally fueled by short liquidations, and which is led by Ethereum. So these are the factors which are giving strength to the market, but it is not a sign of extreme strength, because a spot driven rally and a Bitcoin driven rally is more strong. Next we have the Bitcoin monthly returns. So if we see now August is fairly a neutral month, and sideways can be expected, but August is much better than September, which is the worst month for crypto. And we have the merge happening in September. Mt. Gox is happening in September. So this will be this rally in the short term is the only playable rally, I think, in my opinion. And let's see how high it can go. But I'll be careful and advise the members also to be careful in September. So you see, this is the seasonality chart. We are playing this rally right now, and it can be possible that we have already completed the rally in this TP zone, which is the average realized price. However, some of the technical analysis, it shows that flip of this can take it much higher, and but just be careful about this decline which happens after it, and position yourself accordingly.